Hello everyone, welcome to another weekly market review. It is the 7th of December 2020. Currently we've got the dollar making a bit of a bounce. Interesting time for the markets. Let's have a closer look. Total market cap chart on the weekly. We don't have too much resistance on a closing basis all the way to the 693 level. Though we did not make new highs on the weekly, you can see that it's either consolidation, reconsolidation, or distribution. Very significant level on the 3-day time frame. We'll get the 3-day close tonight, but you can just see how significant this 551 level on the 3 days. Look at all these wicks. The supply, it's indicating supply. It's quite a long period of time. You can see there's quite a few wicks. Now let's go to the 1 hour. So this is the trade I took. If you are not in the Discord, this is the trade I took. Basically shorted between the 0.5 and the GP, and what I have as negation is for price to start finding support around about here. So it's simply because we've had stop runs, making low highs, or there is no confirmation. This looks like what could possibly be a descending triangle, but of course these cannot be played unless it's confirmed. What I would say is that I could have had a better entry, but there is hindsight. This is the zone where my entry was, but I think I could have easily flipped higher, considering we're in a range, so it did not need to be as aggressive. Nonetheless, there was a lot of ways to manage that swing trade. Why I would say that the negation is up here is because we've had the stop runs. This is where the supply is. Once price starts to find support at these levels, then we should be looking for upside. On the other end, if price loses the 2018 yearly open on a closing basis, I would say that we should at least be coming back down to this daily level, or to where the middle of this range has some high volume, because I think it's starting to build some kind of volume over here. So this should be the plan. Right now it's a range, it is a tight range, so don't bet too much. When volatility gets low, it's better to allow the market to play it. And if you do want to trade the range, there is pretty simple ways to be able to trade it. You can just build out the range. You can see 0.5 flipped into support. You have the next target, breaking down out of the range back into the range. You have the next two targets, 0.75, 0.5. We've had the 0.5. Essentially should have at least gotten a stop run here, so this would be an active trade. Currently we did not get a liquidity grab. This is a tough trade to take if you're playing it from the range strategy, but anyway, there is a range right now. We break below the bottom of this range, take out this 2018 yearly open, can start looking for downside. And what I would say is, if you want to be safe, then you want price to start finding support here. But if you're looking for downside, I think that starts to get negated once price starts finding support at this 572, 573 level. Altcoin market cap has been weaker slightly than the total market cap last week. Of course, again, rejected at the monthly level, failed to make new highs, but currently still holding this 190 weekly level as support. Then this is the key level for the altcoin market cap, and that's the level to lose. Again, on the 3-day, you can see how significant this level is. If we start to lose this and go back down on the way up, this big level of supply, this will get confirmed as supply if we do break below. But for now, again, you can see very tight range. Let's look at the 4 hour. 4 hour again. Actually, on the 1 hour we have something slightly cleaner. Yeah, so on the 1 hour we have kind of a falling wedge. So if price does start to, I would say, trade above this H4 level, then this could be significant in terms of this wedge. It's not the best shape for a wedge, because you like it steeper, generally like the slopes a bit steeper. So on some different time frames, like on the total market cap, it can also appear as a descending triangle. But nonetheless, this is clear resistance, can flip into support, can start trading it. I would say there are individual coins that are already doing pretty well, so there are some outperformers. Out of large caps, there is Monero. Out of the Sushi has been leading the market for the DeFi market since a while. On Uniswap, there's a few coins that are doing well also, so those should be looked at. But the broad market, we still have to see how price can resolve. For Bitcoin, the first study I want to share is of this 3-day RSI sample, where the RSI reached levels of 89 to 90, and after the first move down, it failed to make a new low. Rather than that, it made a new high, and then we got a correction. So we have quite a small sample size. Only 2 other times that Bitcoin has done that, and both times we had a 7% move, and it took between 14 and 17 days for the price to drop. Alright, so this is 2016. This is what happened in 2016. We made a triple divergence and eventually a 40% drop. This is 2019. Again, we had 2 divergences, a little bit of a stop run, but then we had a 17% drop. Alright, and in 2019, what we had is basically made the high in about 12 to 13 days, and after that we chopped about there, and then we made a drop after a stop run, and here we are. This is 2020. So what do we have? We got 2 divergences, alright, and basically what we've done now is we've had 13 days since the primary divergence, so what I would say is, for the high time frame, I mean, if you're looking at a very high time frame perspective, Bitcoin's momentum is through the roof. But you're looking at a daily time frame, the momentum to get exhausted would be anywhere between within this week, I would say, if it has to get exhausted. So whatever we've had this top going on since I guess it's now been 20 days almost that price has been in this range. So I would say that this week looks like the time where we will get resolution to this. So on the weekly time frame, Bitcoin has made the highest weekly close ever. This is on the index, so it's a group of 5 exchanges. For me, that is relevant enough. The people will think about one specific exchange where they want this, but for me, this is the highest weekly close ever. So that is quite significant, in terms of what price is doing over here. On the daily, you can see very clearly this consolidation is showing, so it's just declining volume over the next 2 to 3 days. That adds confluence to what I showed you earlier, regarding over the next 2 to 3 days we should be getting that resolution. So even the volume profile is adding to that. On a lower time frame, here's my chart on the 1 hour, and you can see pretty clearly what we have. A very clean range on BTC, currently finding support bottom of the channel and the mid. There's been quite a bit of chops, so people are not being able to recognize and deal with how to trade low volatility. It is just something that is just a skill you have to gain, possibly in the bear markets. We also have a wolf wave, which is possible on BTC. If we get another high, I would not know if this is valid yet or not, because we haven't really broken the highs up here. But I would say that if we do get another high here, this is much cleaner. So if we do get another high up here and a failure, this would be cleaner, but there's still a ascending wedge. Price breaks below and retest this channel, you can start looking at the top of the other channel and the bottom of this range. And what I would say is a confirmed breakdown once price breaks into this channel, I think. So we have very strong horizontal levels, but you can see very clearly that we also have very clean diagonal levels right here. You can see this was the parabolic diagonal that we tested from below as resistance, and then you can see once we broke the next parabolic diagonal, we tested it below as resistance as well. So this is pretty interesting that in the diagonal space what is going on. We're getting support resistance flips over here. So if we do end up coming back down, starting to trade into this channel, I would say there would be a higher time frame confluence to look for downside. And of course your first targets, there is volume inefficiency over here, which lines up with the first target of the channel bottom somewhere around 17,500. Would we break down from below this, I think a liquidity grab right below this level and looking at the mid to high 15,000s, I think that is a probability. If prices to start closing below this 18,400 and 18,100 levels, this is the big support over here. Not only is this horizontal support, we had it is basically the point of control of this entire range, so very high volume node over here, which is adding confluence to the support, so I think until this is breaking down, there is no point to really be looking for where you want to buy further below. And for upside, I think we have to start consolidating above the range, which is also the middle of the channel. Currently we have been getting a resistance at the middle of this channel. If price starts to trade above this, we can start looking at upside targets of 21,300 and 24,300. But for now we are in this very tight low volatility range. There is absolutely no confirmation of the direction until it moves there. You can trade to the extremes of the range. That's a decent strategy, along the bottom of the range. Take profits at the 0.25 at the mid. You can hold some, and add to it once we break above. On the other end, if we break below the range, you can start looking for downside. For the traditional markets, the main chart that can be the driving factor currently is the dollar. We have a couple of confluences for a potential short squeeze. Even if this is a strong downtrend, the market doesn't always go down. If too many people are on the right side of the trade, everybody just cannot be paid. It's very rare. It's at the beginning of certain trends where that happens. So we can't discredit that. But for now, what we have as one factor is RSI divergence on the daily time. Oh, this is on the weekly time frame. Sorry. And what else we have is this anchored VWAP from the 2011 bottom. And what we have is currently a 1.6% deviation to the bottom of the VWAP. So the only time we've had this is 2012, such extreme deviation at the bottom of the VWAP. So either we, burst right through and go down hard, or we get that short squeeze, because we also have one more confluence for this. I think this is an excellent analog, and for now this is what has actually been my guide as to how very, very strong bull markets work. We only have 3 contenders for the strongest start to a bull market ever, compared to what we are doing right now, March 20 to current. We have March 9th to Feb 20 and August 82 to August 87. All right, so you just look at what kind of starts they have had and what eventually happened. Very steep, and you can see gradually that the curve is just declining. but what is happening is we're continuing the move up. So highest risk initial gains, then gains start to get smaller, but the trend continues to sustain itself. So this is something to keep in mind, and I really think this is what is happening with the market right now. There are no extreme fundamental factors that can decimate this. So just keep this chart in mind when you're looking at and thinking about long term in this market. So here it is, the third confluence we have. Asset managers have boosted their short bets on the US dollar to record levels. So you have a few confluence to possibly think about this being a higher probability. We still have to wait for price, because in the end price is king, but this is enough to be cautious and understand that if a dollar gets a short squeeze, all markets will be adversely affected. We have another statistic right here, and this is to do with how good November was. November has been a record-breaking month, not only for small caps, but also one of the largest performing months for the S&P 500 itself. So what we have is historic S&P 500 index gains, after greater than 10% monthly gains. So still, this is a decent sample size. What we have is, for the next month, this is also quite critical. For the next month, a lot of times, only half the times we have had positive gains, but the average and the median is quite low, So, but the next 3, 6, and 12 months, positive gains at a very high percent of probability, above 75 is incredibly high. So I would say the next 12 months, again, another metric that shows a lot of positive gains, but still for December it's possible. Generally, historically, December is a very, very good month, so you have to see. But look at this, we had a couple of Novembers here, 1980, 1962, because essentially historically November is the best month. We had a couple of Novembers here. So this is the third November. If we're looking at seasonality, November and December are generally good months for the S&P 500. So you can see we still had one negative 3.4% month right here, and there was a positive 1.3 also. So it could be a possible flattish kind of December, considering what is being shown in this statistic. But the 3 month, 6 month, 12 month, again, very, very good probabilities of positive return. Here's another bit of analysis of the CNN Fear and Greed Index. So what you can see is that a couple of times it has given quite a good indicator. The first drop, extreme fear, has given the good corrections. Once it has given a false signal on the fear, and even February was not bad, but it already had a big drop down. But if you look at the greed, the extreme greed, what we've had is signals for continuation to upside. So extreme greed has not shown any kind of positive result over the last 2 years. So this is something to keep in mind. I had posted this in the Discord, so I just wanted to make it clear, because I stumbled upon this new piece of information. Another very notable metric, the Cboe equity put call ratio. So the 5-day moving average has reached its lowest levels since 2000. There's something to keep in mind, and we have to really backtest this strategy again. But essentially, traders use this as a measure of sentiment. So we are very overly bullish right here. For me, I'm still bullish. These are metrics, but I am still bullish, and I don't think anything more than a 10 to 15% correction is what we can get in this current market conditions that we have. For commodities, today we have a multi-year base breakout on the weekly time frame. For platinum, this is a 5-year breakout. But essentially, we have to be careful. We've had quite a few false breaks, so we have to be careful. What price needs to do is hold about 995, but this is the level. It has to hold about 995 as support. So we have pretty good negation, very close to where price is currently, so it'll be a decent place to manage risk for a high time frame trade. But 996, 995 is the level that platinum needs to hold. And I mean, essentially we're looking at the dollar, because that's what is affecting this platinum trade right now as well. So this is just something to look out for. Currently whatever dip we've got has kind of been eaten up. We have to see if it can structure out here, start trading about the weekly pivot. You'll have a good place to manage risk for further upside.
If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!